holidays. Good Christmas week to everybody. May not be a real crazy type of week. Could be a very calm book squaring week. Hello, Thomas, William, Patrick. Good morning. Good evening to everybody. So last week on the Fed, we turned down pretty good on the dollar, recovered the rest of the week. Today we're starting off lower. Still my contention that this line down here at 90 is going to be a magnet for a 3 and a falling wedge. So I favor the downside in the dollar going into the end of the year. I know a lot of people were looking for 97. Perhaps that happens first. I'm thinking that dollar weakens into the end of the year, finish off its weak, and then maybe sometime early next year we try for a turn in the dollar. I still think that's going to be above 120 in the euro, and that there's another high coming in cable as well. Of course, we're not going to get a new high in Aussie, but probably further retracements happening in that. So this is what I'm keying into as we draw towards the end of the year. I'm starting to think about what happened this year, and this is what happened this year. In 2017, a downtrend in the dollar. So perhaps we get the big hurrah into the end of the year, early next year to finish this off. And then we'll see if there's potential for reversals, which I'm in favor of, starting next year. Not sure when, but to me, it's also going to be important, not that it gets down there, but how it gets down there. Because as you guys know from listening to me in Face for 9 months now, what a great 9 months, guys. I think that we had a very productive, snoop, very productive 9-month period, and expecting a healthy set of quintuplets from this 9-month gestation period of Face. Not just one baby, not twins, not triplets, but quintuplets. And all of you guys are part of it. You made it great for me this year, and for the rest of the team with your participation, for supporting us by becoming subscribers. So I want to thank everyone. Thank you, Luca. Thank you, everyone, for that. So individually, last week, I just want to draw this to your attention. You guys know I've been positive, e.g., there's a few reasons for it, but it was rejected last week. Some people were calling this a head and shoulders off this line, but look at what contained it, okay? It was the 50-day, no, the 200 on the 4-hour. So that contained it there. Not sure if something did on the 1 hour. I still give it a probability of higher, maybe by a break back towards a big round number of 88. To me, this looked pretty impulsive. Maybe we're just getting a pullback to 88. But the way it looks to me is the same way it looked from the bottom down here. They have had a lot of people trapped. They gave them hope. They smashed their hope. And as long as we hold this 87.60 level, I think a breakout over this 860 level is going to generate a move all the way up to the top of the wedge, which is 89.80. And then we'll take it from there. Actually, you know, Steve's been showing this big rectangle on the daily that we've been in, that we have this false breakdown, this signal down here. And I think there's a chance we even go for the stops here. It's all going to be contingent on holding last week's lows. Under last week's lows, a continuation move, and most likely a breakdown that follows through after most of the shorts have already given up on it being squeezed for the last week or so. But I still favor a move back to the top of the wedge unless we start taking out last week's low. Everyone with me? You don't have to agree with me. I just want you to see what I'm seeing and what I'm thinking. You could integrate it into your plan or not. So This tells me that if this is going to happen, my preferred long is going to be in the euro, not cable. Cable's leading it today. So with that being said, I know Blake's here for a couple of days and then he's leaving. I'm going to pass the baton to my partner and someone I've really grown to respect over the last 9 months, not just for his technical work, especially for his technical work, but he's one of the hardest working guys I know. The whole team is. I mean, it takes them hours upon hours every day to provide you guys with all the great information that you get on the TL page. Blake was explaining last week, while he's trading a lot of money, he's still updating all the different support and resistance levels that are being breached during the day and doing all the conventional, basic, technical, and candlestick with Steve. And I know Greg puts a lot of thought into his work, and Nick does too. So I'm just curious. Let's take a look at what Nick is seeing in Canada, since it is Christmas week. For those that aren't subscribers, I know Steve wanted to see. She's showing this resistance here, but showing a target. That's what Steve is looking for too. The 61.8 up around 130, 130. So if this happens, you know, we have some ForexAnalytix confluence up here at the 61.8 level. This is new research added to the mix. Steve's been talking about wanting to be short up here for a few weeks now, being patient, letting it do all this corrective work, and people will get bullish, we'll get a breakout, and at 130 looking for short. So Nick and Steve agreeing as to if you're long USD CAD, where you should be booking it, and if you're a long-term bear, where you may want to consider short positions. So Merry Christmas, everybody. And with that, I'm going to bring Steve on. Good afternoon to you, Mr. Volge. How are you?
Hey, Dale. How have you been, mate?
Good, buddy. It feels like Friday. Alrighty.
Most likely, the vast majority of the days are going to be feeling like Friday from this point on. Or anyhow, plenty of them. By the way, Blake is leaving tonight, so you know, this is the last day he's going to be with us for. I mean, he's going to be absent only for 3 days. Some Bloomberg terminal training.
At least he'll be home for Christmas, though, right?
Yeah, and you know, it's definitely for a good cause. He's going for some Bloomberg terminal training. So you know, that's also.
You know what he's going to be doing by Thursday in his training, looking at Bloomberg. He may not do it out loud, but he'll be thinking this: "I'll be home for Christmas." He won't be able to wait to get home. So, all right, buddy. So, anything really compelling happening between Friday and this morning that you see? The dollar finished strong. I looked at the preview of the week ahead. This kind of opening, is it kind of giving you an inclination that, I learned this from you, that the dollar, what happened in January actually followed through for the whole year? I'm thinking that perhaps we finish the year that way, by the dollar maybe even probing into the low of the move, or early next year taking it out. What do you think of that view?
Listen, the trend is definitely the trend definitely remains bearish for the dollar, because we had a bear move that lasted for 9 whole months.
Yeah.
And for the past so let's call it 3 months, we've had a very tepid recovery. I mean, nothing of this recovery shows or screams out that we found the bottom. We need to see the dollar do a lot to be persuaded that that's the case. Until then,
how about that? Above like 97 would be a bull bear line for you?
Even if we break the previous high at 95, it's going to be an important move.
Okay.
But for the time being, we keep banging our head on the 94.20 resistance, and we still haven't broken above it.
Okay.
And you know something, both the dollar and stocks have been having several days of, in a sense, repricing in a successful tax reform. And you know, if that's the only thing that keeps the dollar somewhat buoyant, what's going to happen when the tax reform actually passes? I mean, what's the catalyst that will keep driving it higher? I mean, these are important questions to ask, and for the time being, you know, I don't see something really in the horizon. Obviously, as always, you know, the markets have the ability to surprise, but obviously, as always, being with the trend is something that more times than not is going to help you be on the right side of the markets, right?
Yeah. You know, I think a perfect setup would be to clean out the dollar bulls that have been getting long the last 2-3 months, like you said, without much progress. Although, you know, I can't rule out maybe one more push up to 96 or so before this happens. But I'm looking for dollar bulls to really throw in the towel under 92 before we get what might be a more significant dollar rally. I still think we're going to see a 120 print or above in Euro USD before we get a breakdown.
This can happen, but I just measured it to be exact. I mean, after like 3 months and a week of a recovery, the dollar is sitting just 3% higher than the low it found in September. I mean, this is a very, very weak recovery, right? Even if you
didn't even get to 32, did it?
No. It didn't even reach the 38.2% retracement. No, it didn't actually. I expected the recovery to be, you know, somewhat stronger, and it yet might be, because you know that might prove like to be an ABC or whatever. So you know, I really don't exclude the possibility. I think that as long as we remain between the 92.50 and the 94.20 levels, in the short term, I repeat, the dollar is trendless. In the short term, because if you look at the bigger picture of the chart, obviously, you know, there's no question about where the trend has been. So in the short term, really buying the dollar near 94.20 or selling it near these lows is probably a bad idea, right? It's better if we give it some time and let it do its thing, and you know, determine if it has one more leg higher, in which case, you know, we might even this time reach the 38.2 or even a little bit higher, or if that was it, right?
Yeah. I know a lot of people, when we bought them, Steve, were looking for about 97 into year end. So yeah, you know.
Yeah, this is obviously impossible anymore in the days left. I mean, something, you know, incredible has to happen to reach these levels within the few days remaining in the year. And by the way, I need to remind the people to be very, very careful, especially in the week that follows, like the
Christmas and New Year's.
The week between Christmas and New Year's, you might see some stupid moves because of complete lack of liquidity. And it's a good idea if you avoid trying to chase them, because very often these kind of moves get completely retraced the first few days of the year. So it's a good idea not to get trapped to any breakouts or whatever might happen, because you know the chances of false moves and false breakouts are quite high.
You know, Steve, I put out a tweet. I said, don't try and make your weeks on Fridays or your year in December.
Oh, absolutely. Absolutely. And you know something, it's better. I mean, even if you didn't have a good year,
take the time to reassess and recharge.
Take the time to reassess, and you know, don't try to make it up in a few days of illiquid markets, because you might get lucky, but on the other hand, you might make your year, you know, much worse than you thought it was.
Okay, buddy.
So other than that, we have a few things to see. I mean, a lot of things are trading in an interesting way, so I'm going to go over a few pairs, and then of course we're going to take some questions. But before we go through the FX pairs, let me just say that first of all, U.S. stocks, remain unstoppable for the time being. So, we had a huge day on Friday once again. I mean, the tax reform is the gift that keeps on giving. Every time we get some little doubt that it's going to be a slam dunk deal, and we get like a small dip, like a 0.3, 0.4% dip. Usually that's the opportunity to rally like twice or three times that within a few days, and then
what's the next fib extension you have up there?
Listen, we're running out of. Honestly, I was writing that a few hours ago with to Blake and Stelios, is that the US stocks have started resembling cryptocurrencies. Of course, not that the rate of appreciation is equivalent. It couldn't be, because one is a mature market with a lot of people trading it. The other one is like casino market. In a full-blown mania phase, but in the sense that, just if you look at it, we've had very, very minimum. I mean, since last year and the big down day we had with Trump's election, every single retracement we had has been very minimum, and using very minimum corrective moves lower. The amount of extensions you can use are like quite limited. So, we can look at it in the long term. We can look at it at a week.
2744.
Sorry, say again.
2744 is your next fib extension. I saw when you pulled the chart down. 2 points.
Yeah, can be. I mean, we have some in between. I mean,
well, that's what I was asking. Yeah, because 1.618 we've achieved. Oh, you got some at 27 and a quarter.
Yeah,
okay.
but something. I mean, in all honesty, working with our only guide being fib extension from a very, very small, like half a day recovery. Correction. It's far from ideal, right?
Yeah. Okay.
I mean, it's too little of a technical signal to get you like enthusiastic about it. The only thing that I see here that's really important and of relevance is this ascending wedge. We are currently having a throwover from it, and the 261.8 extension of the only real corrective move we've had since 2011, right? This one, the ABC we had here in 2015. So something, if we do see a reversal and a drop back below the wedge's resistance, and that extension in 2670, and especially if it happens with some momentum, then we might start talking about the possibility of the downside. But given the fact that we've actually reached this point, by the way, the weekly RSI is like at 85, 86 or something like that.
I've never seen that on a weekly.
If you zoom out, I mean, look at it.
Yeah.
We have to go back to 1995, something like that, which says all you need to know, right?
Yeah.
So there is no question we are extremely, extremely overbought in any way you see it. I mean, valuations are stupidly high at the moment. And obviously, at some point, this thing is going to reverse. But, there's no signal yet. There's no signal yet. I'm telling you, I'm monitoring this wedge. If we actually, and there is a big chance now that we've actually reached the 18th of the month, there is a big chance, now it has increased, that we're not going to see any significant pullback until the new year.
Yeah, because of the new tax law, a lot of people don't want to sell until next year. Because was there a change in capital gains treatment?
I'm not sure about that, actually. I don't trade stocks, but I know that there are like several factors, more than 5 factors that traditionally favor what we call, in a sense, the Santa Claus rally. And, very often that has been respected by the market. I mean, the vast majority of the years, we do have good period like during the past couple of weeks of the year. So there's now a high chance that we're not going to see a significant pullback until the beginning of the new year. So obviously, being short is kind of dangerous, especially with liquidity drying out. Now, having said that, the only stock index I want us to have a look at is the DAX, because the DAX, is having a huge day today. Actually, it's following, risk on other markets, and it's currently testing this channel of resistance. So, this is the do or, make or break area. So, if we actually turn lower from there, the scenario that this is a recovery move is still valid, and we can push lower towards 12,500.
I think last week I was talking about that confirmed high that we had at the high, but you thought there could be a C. Now it looks like they're going to go for that confirmed high, and it won't confirm.
There is a chance. There is a chance. There is a chance. Yeah, because the more it doesn't break lower, the higher the chances become that something like that is going to happen.
Yeah, they're not up here.
Yeah, even if you dumb it down to a 4-hour chart, somebody can even see a not so beautiful.
Yeah.
Inverted head and shoulders formation.
Yeah. Where it could fail from here. Yeah. They're just going to be bears on risk the rest of the year. That's kind of the way it looks to me.
Yes.
And then your January theory will have to pay very close attention to what happens during the month of January.
Yeah, that's true. That's true, because we might get some pullback. That might be at least some profit taking. You know what I mean? At least like a small move lower. I mean, small. We might get at least a 3-5% lower. For some profit taking and then repositioning, etc. So enough said with stocks. Let's have a look at a few currency pairs that are actually at interesting levels. One of them, we even sent an alert before, is the cable, because even if you go down
to again.
Yeah, the cable found once again support at the top of this 133 support area.
I'm going to shut up for a while, Steve.
And it's moving higher once again. As long as it holds this area, the possibility of this being a bull flag is a decent possibility. Obviously, this cannot go on forever. I mean, we would need to see a break higher, decently soon, because then the analogy of the flag to the pole is going to start getting messed up. But if you remain bullish the cable, there is still hope that this is the main scenario here. So this area of support very important to watch. Also, this descending channel very important to watch, because a break higher from it might signal another push to new highs. More or less the same applies with Euro USD, because there are two scenarios here. I mean, there's the bull scenario that this is a consolidation, we're still near the highs, so we might push to new highs, and the dollar weakening once again, because unquestionably, as we said with the DXY as well, the euro came in from a very bullish move throughout the year, and the move that has followed definitely lacks any impulsive characteristics to the downside. So we have to treat it as corrective until proven otherwise, right? On the other hand, if you see the short-term chart, there is the potential of a little head and shoulders formation here, but for that to play out, first of all, we need to break below 117, in which case then we will be looking for a move down towards 114.50, or at least, the lows there, 115.50. But if we actually manage to break above the 118.60 area, then obviously that possibility gets invalidated, and our main scenario that the euro has another move higher gets validated. Obviously, being at the moment between 117 and 118.60 doesn't make this an area that establishing short or long position makes any sense, right? We are in the middle of this quite narrow zone. It's only 160 pips, so I don't think that it's a wise idea trying to guess here if it's going to go higher or lower. Obviously, as I said, a break to the upside is favored, not because I say so, because the previous trend says so. Now let's have a look at the Aussie and the Kiwi, because I think they are the ones that trade with a little bit more conviction since we broke above the descending formations. The Aussie came down, retested the 76.40 area. It's rebounding today. As long as we remain above that area, another push higher to at least 77.50 at least is absolutely favored. And the same applies to the Kiwi, having to do with going back and testing the 71 area, at least the 71 area. Okay, so Aussie and Kiwi in the short term, I reiterate in the short term, because we need to distinguish here, short term and medium to long term. In the short term, looks quite constructive. I remain bearish in the medium to long term, but that doesn't mean that it doesn't have that it couldn't have a few hundred pips to the upside left. So as I said, in the short term, and as long as we remain especially above 0.6970, I think the Kiwi looks good for another push higher. Now let's have a look at a few other currency pairs that I think are at very key levels. One of them is the USD NOK, which once again is getting rejected from the 840 area. I wouldn't rule out like a strong push higher, strong short-term, very short-term move higher to wipe out anybody that's short. I'm short, by the way, and that's why I don't have a stop loss at the moment. And then a reversal, because even if this move proves to be the beginning of a stronger move higher, which for the time being I doubt it, I think it's very mature, and we should at least get a pullback towards perhaps the 817 area once again, something like that. So I like it short here, as I like short the USD SEK here as well. I don't have a position yet here. I'm waiting for a break below this trend line, which has been testing for the third time, not the third day, it's more than 3 days, but the third time, this 61.8 and area and the resistance zone. So this also looks like momentum, the upside momentum has been lost for now, and the more we bang our head here and we fail to penetrate through it, the higher the chances that the bulls are going to give up, and we're going to see at least one move lower, perhaps towards the 820 area. So I think this is an interesting pair as well. Let's have a look at the USD CAD. USD CAD, my main thesis here remains. For some reason, I would want to see it break above the ranges top, so break above the 129 area, and ideally push even the 61.8, where I would really be interested to be short after I see some type of a reversal candle or whatever. Let's have a look at a few questions. By the way, I see strong interest about the pound Aussie and the pound Kiwi. Okay, first of all, pound Aussie, we had talked about this, both a horizontal support area and the ascending channel. As you see, at the moment it's rebounding from there. Of course, so far today this is an inside candle, so nothing much to write home about. But if this recovery persists for a little bit, I would want to see what's going to happen at a retest of the 175.80 area. Depends on what happens from there. I'm going to be able to determine if there is more to the downside left, or that was the end of the correction. Having a look at the pound Kiwi, more or less the same situation. It looks more bearish because it actually did break below the channel support, and but the pound Aussie does not confirm also the fact that we have not broken down below this major trend line resistance you know, that we actually managed to penetrate, and you know, this was the resistance of a big bottom formation, and we haven't broken down below it, is also a fact that keeps me bullish in the medium term, despite, you know, the move lower we've had. So I think you need to be careful. We don't have confirmation yet that the larger moves have been reversed. We only see corrective moves lower for the time being, and we need to see how that's going to play out. But we, as usually with corrections, you need a little bit of more price action to determine the nature of the corrective move, or in some occasions, because you know that's going to happen as well, or if that's a true reversal and a true change of the trend, which, you know, statistically speaking, that's always a lower possibility, right? Swiss yen. Oh my God. Okay. Oof. Okay. Haven't checked it in like a huge amount of time. I mean, last time must have been there. So it was like beginning of November. And as you see, the Swiss yen is holding this ascending triangle support for the time being. Even if it breaks, I would be monitoring at this horizontal support area. Let me see if we actually also have. There you go. And you should be monitoring at this trend line as well. So I think it's quite well defined. I mean, you know, we have this trend line, and the horizontal zone. Even if I was looking to trade it, which I'm not, I would not be selling a break there, because we have this important trend line, area of support just below it. So I would be looking for a break below there to actually take, you know, a position in the market, or alternatively,
triangle maybe, yeah.
Yeah, or alternatively,
yeah,
a
or
break,
yeah.
a break above there.
A lot of either ors out there right now. Have you noticed?
Yes, but you know something? Yeah, it makes sense. You know, because the time of the period of the year, etc. And you know, people should embrace that. I mean, they shouldn't be trying to fight it by forcing positions, because that's what usually messes up your account.
Let the market tell you, right, buddy?
Yeah, but let me tell you something. There is no trade here yet, but you know, we are in a formation that's actually tightening up, so the pair is coiling, and you know, you might soon have an interesting trade in your hands. So you know, this is the 112.60 area. Let's call it 112.50 area for confirmation. Now on the upside, you have this trend line, which you know keeps converging with a horizontal support area. So you know, you have also, you know, this is something that obviously, I mean, mathematically speaking, it makes absolute sense. The fact that you see the 200 DMA, which is a slow moving average, and the 50 DMA, which is a rather fast moving average, having converged so much, is another proof that in the short term there is absolutely no trend here, right? Because when you have a trend, you need these, first of all, not to be horizontal, because as you see here, they're horizontal, both of them are horizontal and converged. When you have a trend, first of all, you want them to have an inclination, because it shows, you know, that something is happening, that you're headed somewhere. And second of all, you don't want them to be converged that much, right? So this is another proof that there is nothing to do now at the moment. But, you know, it's worth monitoring this formation, because sooner rather than later, I mean, it's going to take a week, it's going to take 2 weeks, it's going to take a month, it should break out. And when it does, there is a good chance that, you know, all this coiling that has created, like, let's say, some form of, you know, dynamic energy is going to transform, as it happens with physics, to kinetic energy, right? So then you can take advantage of that kinetic energy to establish a trade, right? A good chance, though, that's not going to happen until the, you know, the beginning of the new year, as many other things might not break until then. Okay, Blake, are you with us, by the way?
I
hey,
am.
mate.
I was just letting you wrap up what you were talking about.
Hi, Blake.
Hey,
How
Dale.
was your weekend, mate?
Good, good. Just trying to, busy to get things all taken care of as much as I can before leaving.
You leave, huh?
Yeah, and I'm going to be out of town for this week, and then I come back, and I've already got family in town, and it's kind of a busy. It's obviously going to be a busy time from here until the Christmas holidays. Hey, I was hearing you guys talk about the dollar. One of the things that on Friday that really stood out to me was that speculative positioning in the euro dollar is at the highest levels that we've seen in a long time. And from what I thought it was the highest levels we've seen. Shoot. I'm looking at the movement capitals COT data, and I don't even know when the last time the euro dollar was when we had this high of long positioning in the euro dollar from speculators. So it's let me go back. Yeah, I mean, I'm looking. This is the highest levels I've seen since the max data that I can pull up on his chart. So, and I'll show you guys what I mean by that. Let me go over here. So this is one of the things that you have to be a little careful about, and you can see this is I removed the dealers, but if you look just the speculators, let me click on that. Can you guys see my chart or my screen?
Yes, Blake, we can.
Okay, so you can see speculators are at some of the highest levels that we've seen ever in the euro dollar, and that's a little nerve-wracking. I mean, if you're long the euro, you've got to be thinking about that, because when speculative positioning is extreme, you get turns. You can see right here, like here's a good example. Speculative positioning is really high right here at this peak, and the euro reversed. Speculative positioning is really high here, and we reversed. It doesn't mean it's going to turn us lower like immediately, but the risks are that you can see how we got speculative positioning near the same levels, and the euro turned lower, and we're at high levels. So there's a lot of people betting, speculators betting on a higher euro value or a weaker dollar, in other words. And actually, I think we have the dollar. Let me see if I can find the dollar. Here's the dollar COT. Speculators are at levels that we haven't seen since back here in 2012, 2014. Yeah, 2014. And when the market's so short dollars, the risk is that the dollar might squeeze a little, right? Yeah.
Oh, that's Adam from Movement Capital stuff.
That is correct. Yeah, this is Adam from Movement Capital. But that's why you when you look at the euro dollar, and let me go over to the dollar index, and because it's just the euro in reverse. I'm with you, Steve, as far as and if you guys saw the week ahead video, I'm with you as far as looking at the dollar index as an impulsive move lower. But I think the risk is that we might, in the near term, break higher first squeeze the dollar. Remember, everybody's short the dollar right now. So if you squeeze the dollar shorts a little bit and get the euro or get the dollar back up to 96, or that would put the euro dollar basically at probably 115 or so before continuation higher, I think that is a real big risk. And one of the other things that that we might see is repatriation of dollars going into year end, right? So that's another risk. And so with that being said, you have to be
a new phenomenon, Blake. That because of the tax law That hasn't happened in a long time.
Yeah, and
It
people are
happens in Japan all the time, every year or quarter, but hasn't happened here in a long time.
yeah, it happens at fiscal year end in Japan, which is in the spring, I believe, if I'm not mistaken. But there, you know, that's a risk going into year end, that there might be some repatriation of dollars, so the dollar could, you know, rally as a result. So yeah, I mean, the euro's bid, you know, the euro's having a nice recovery right now. It's Monday as well, you know, it's you know, beginning of the week, and the euro's rallying, the dollar's pulling back. But I think that is a risk. I think that's a pretty realistic risk to the dollar at this point. So that's why I think we have to be a little careful here. And so, but you know, I look around and you know, the pound is still holding above 133. You know, it's getting a nice bounce. The euro dollar has bounced back to 118. You know, it's got some pretty key resistance up here at the 118.10 level. You know, the Aussie and the Kiwi are still fairly firm. They're not really following through to the upside, which I'm surprised, because they have really been outperforming the euro and the cable, but now they're just kind of, you know, lackluster moving. And you know, you take the US dollar Canadian. The US dollar Canadian, I mean, maybe this is one of those pairs that that kind of shows us the way, the canary in the coal mine, if you will, because we're up against really big resistance here. I mean, if the dollar Canadian, but also at the flip side to that is the dollar Canadian is up against really, you know, key resistance. If we do break through 129.30, which would be up here, that could maybe signal that the dollar, you know, the dollar is set to make a move higher. But we still have a lot of work to do. I mean, I don't know about you guys, but I'm not willing to stand in front of this huge resistance that I'm seeing here, you know, up here, and just try to get long the US dollar Canadian, knowing that it's failed so many times up here. But it is, you know, pushing right up against really good resistance. So, you know, those are just some things that I'm talking about. And Steve, I heard you talk about the stock market as well. And you're right. I mean, the stock market is parabolic. We are expecting the tax plan to be signed this week, the vote to happen tomorrow, and for it to be
that keeps on giving every time. Every time we have like any kind of doubt about it, you know, we dip a little bit, and then when the doubt goes away, you know, it's an opportunity to rally like multiple times what we dipped.
Yeah, and it looks like, you know, they've got the votes, and it looks like it's going, you know, to the vote, going up for vote tomorrow, and then it's going to, like I said, it's going to be on the president's desk come Wednesday. So the question is really what happens at the end of the week. You know, once, do we get the buy the rumor, sell the news, or, you know, does the market say, hey, you know, that's great, now let's continue to rally? It's hard to say going into year end, but there's year end flows that are going to be hitting the market, and they're hard to stop. I mean, once I've been in a lot of markets over the years where, you know, the time between Christmas and New Year's, that the flows just keep coming, and it you know, whether it's dollar buying or dollar selling, and there's no one on the other side of the trade, and so it just continues to grind in that direction. So, you know, if you're looking at, you know, buy the rumor, sell the news in the U.S. equity markets, you know, I don't know. I mean, we might just get continued buying until the first of the year. I think that it's usually the first couple weeks after the first of the year where you start to see some real decisions being made in the markets. You know, if the flows are strong enough going into year end, I'd be really careful about trying to fade, you know, whatever we're seeing. And I don't know what we're seeing, but, you know, I don't know what we're going to see, but whatever comes our way, you have to be a little, you know, cautious about fading it. It would be my best guess. You know, there's another chart that I've been looking at too. You know, if the dollar rallies, okay, And I'm not saying that it's going to. I'm just saying that if it rallies, I've been looking at this U.S. dollar Mexican peso, and this thing, it's been very messy. Here, let me get rid of some of these fibs here. And yeah, I guess we stopped at the 78% retracement. This is something that we can. I'll just draw from here. The U.S. dollar Mexican peso, you could argue that this is a cup and handle pattern, right? And this resistance right here is the 38% retracement. You can see it's from the highs to the lows. And there's a 38% retracement that comes in. It's this line right here. You can see it right here. So they're on top of each other, but it's basically right where we're at, right? That's a 38% retracement, and this is really could be a cup and handle pattern. And if it is, this cup and handle pattern really measures from, you know, the bottom of the cup to here, and really would take us probably, you know, maybe 20.5 if it does break out. This is one of those currency pairs that I do enjoy to trade, and you know, I haven't been trading it too much recently. I've scalped it here and there over the last couple of weeks. You know, on both sides of the market, I've been long, I've been short, but I haven't been too directional of the U.S. dollar Mexican peso as of late. But this is one of those currency pairs that if we break out, if it really gets a sustained breakout above this 1920, 1930 level, I mean, we could really, you know, be in for a heck of a move. And I, you know, again, I look at the dollar as I pointed out in the dollar index. I don't see the possibility of a huge move in the dollar higher, but we could continue to get a recovery. I mean, you know, you look at the dollar index. I'm looking at more as a, you know, as a bear flag. If we break above 94 and change, you know, if we do over the course of the next week or two, that we might see 96. I don't see it like going back to 100. It could, but again, you know, it's hard for me to envision it at this point in time. Wow, the pound's actually continuing to make a move here. Look at the pound. Look at this. Look at it just screaming higher right now. Is there any news out on the pound? I'm looking here. May is going to be talking to Parliament here in the next hour or two, but man, the pound's really getting a look at the squeeze going here in the cable, and that means the euro pound is turned lower, probably fairly aggressively. Yeah, here goes the euro pound.
Found perfect support again, Blake. That 133 area is quite powerful, right?
Of the pound. Yeah. I mean, yeah, the pound. Yeah, it 133 seems like to be pretty good support here. Yeah, let's see here. I mean, really key support. It's so choppy though. The pound's, you know, obviously a very choppy currency at the moment, and
still a good chance this is a bull flag. Yeah, I mean, it still looks good as a bull flag, right?
Yeah, I guess it does. I mean, you mean this move right here? That?
Yes, absolutely.
Yeah, it still does. I think as long as it holds above 133, I think we get below 133, especially like 132, and then things get a little dicey.
Oh,
but
yeah,
it's hard. It's hard to you know, envision what is going to, you know, we don't. It's very headline driven, and I think a lot of people, you know, are torn between the fact that the pound is it's oversold longer term, but B, you know, this negotiation process is going to be, you know, years of a negotiation process is going to be very difficult. So, you know, trying to get a handle on the direction of the cable near term, I think is very, very difficult. I've tried to trade the pound. You know, I've been trying to do it and fairly unsuccessfully too. I mean, I thought I had it pinned when it was breaking out here, and I ended up taking a loss on it. You know, it was one of those situations that I don't know. I think it's a really tough trade. You know, whether you're going long or short, maybe it might even be a better trading opportunity on the crosses instead of versus the U.S. dollar. I don't know. Do you have any like thoughts on the cable, Steve?
It's obvious that the break above the descending trend line was not significant for some reason. So yeah, we shouldn't be looking at that. But on the other hand, I'm telling you, I'm focusing more on the short term. As long as this the price action doesn't penetrate 133, and this does not get too much prolonged, I still think that the chances of a move higher are higher given how we entered this recent consolidation. Now, even if we break below the 133 area, I wouldn't be turning outright bearish. I would just be turning again back to absolutely neutral, because if you zoom out, still this is some slow, choppy price action, right? I mean, we won't be able to confirm like a higher high. So on one hand, we will be having like higher lows, but we're not going to be managing to get higher highs as well. So no confirmation of a change of trend. So I think that if we don't break above this potential bull flag, the cable is probably a pair to avoid. That's what I think.
Right, and I think if you're looking to sell the cable, as long as it's above like this 132 level, this is where I get a little nervous about the cable, because if you think about below 132, there's a lot of downside here. I mean, you're talking all the way down to the 120 level, where there's just a lot of open air. Then I'd start looking at it as a failed breakout attempt, but I don't know, it's choppy, and it's really tough to navigate around. I think the cable is right now. And I look, and a really good example of this is just looking at the pound yen. I mean, you got the pound yen that rallied sharply 2 weeks ago, and it looked like we were breaking out, and then now it looks like it might have set up a double top or a false breakout, but at the same time, it's like, okay, it's not ready to be shorted, in my opinion,
because it's above 148. That's the breakout area.
Yeah, or maybe 147, somewhere around here. And so it's a really tough.
Euro yen is even worse. It's spent already like 3 months in a choppy range. I mean, we have a lot of pairs that have been like untradeable, really.
Right, and frankly, my bias on all of these majors right now is range bound, and so what's going to be the next reason for us to move? I'm really thinking that we're not going to find a good real tradable move until after the beginning of the year. Once we get past all of these end of year flows, however they end up turning out, I just don't know if there's going to be a lot of great opportunities directionally in the market until after the new year. It's probably going to continue to be range bound. Now I know Stelios has an opinion. I don't know if he's here. But
I am here.
Hey, Stel, how's it going?
I'm very good. How are you, man?
Hey, how do you read this cable price action, because it is so choppy right now? It's extremely choppy, and that obviously is a pretty good warning not to be too directional here.
Yeah, I mean, my opinion on sterling in general is that I want to be buying dips, especially since we saw the change in the way things are going with the negotiations between the UK and Europe. And I think it's all constructive. I think we can all agree on that. Okay, maybe there are not concrete steps yet that say, this is the agreement, this and that. But I think on both sides, they're showing that they are willing to discuss and find a solution. So for that reason, I am bullish sterling. cable in particular, I've been talking about this in the chat room a lot, and I think in the webinars as well. I was trying to find better entry levels. Ideally, I wanted to get 128.5. This was when it was trading like 131, 132. I think that's gone now. So, if you put a gun to my head on cable, I'll buy it. But I prefer other pairs to get long sterling, like I got long against the Kiwi on Friday. So my favorite longs in sterling is still against the Kiwi and Euro. Cable is a tough one. I personally think that probably with the new year, the dollar will I still think that we might see 95 in the DXY. So if we see that 95, maybe a little bit more, the long-term chart kind of shows that to me. If we see that, then cable might dip towards the low 30s, and that will be a good opportunity. But right here, right now, as I said before, if you put a gun to my head, I'll buy it. But it's not, it's not convincing enough for me to go in and buy it outright.
Yeah, and by the way, just looking at the pound New Zealand, it really came right down to the breakout point. I mean, this is really if I had to put a bull bear line on the pound New Zealand right now, I would think it's probably right here, or where we've made the pivot over the last couple of days. So, it's a nice pickup for you on Friday. It looks like it's getting a decent bounce, but again, very headline driven at this point. Now, it looked like Theresa May is going to be addressing Parliament this morning. Well, this morning for us, but she's going to be addressing Parliament today. So, maybe we might have a little bit better indication of how to play the cable following some of her comments there.
I mean, there's going to be, we know this, for the next year and a half, there's going to be a lot of toing and froing and this, we've seen it so many times with other occasions. So whatever we do, personally, the trades I'm putting on in sterling, I've got very low leverage on them, and I'm very generous with my stops because this is going to be moving around a lot, especially the Kraken. Sterling Kiwi is going to be
right
all over the shop.
And take a look at the pound Aussie. By the way, this is a pretty good pivot off the uptrend line. There's a lot of things that happen here in the pound Aussie. If you take a look at this this daily chart, you can see this previous trend line here. Okay, we came down and we hit a confluence of that trend line, this upward sloping trend line, and we've had a decent pullback, which has allowed for a bounce from where it should be bouncing from. I think if the pound Aussie dropped below 173, which would be 173 and a quarter, somewhere where my mouse is at, that's going to be probably a fairly bearish event for the pair. But as long as it continues to hold up, it looks decent. Steve, did you cover the Aussie dollar or the Kiwi?
Yes, and I said that I'm constructive for both in the short term, and I'm looking for one leg lower. Both of them responded greatly to the breakout areas. One of them 76.40 and the other one 69.70, whatever it is. So I really do think that even if they dip lower than here, I really believe that in the short term they look good, and even from an Elliott wave perspective, we should see at least one more strong leg higher. So I would be looking for further gains in the upcoming days or a few weeks before perhaps the general trend lower takes over once again.
Yeah, and we were talking a bit about and I was mentioning, hey, the dollar could stage an end of year rally, and if the dollar index ends up breaking higher, I guess I look at the Aussie and we pointed out that the Aussie hit the 200-day moving average and rejected, and I think you pointed that out actually on Friday on the webinar, Steve. And yes. Yeah, and if you take this Aussie and you go, okay, well, we hit the 200-day moving average. The 200-day moving average, if it's being respected, and in this case it is, we'll probably need a couple of times to break back above it. Let's say that the dollar does rally, and let's say the euro comes down, and let's say the euro comes down to, I'm just throwing numbers out here. Let's say 116.50 to 116. Okay. Over the next week or two going into year end. If the Aussie, if that happens, what I'm hoping happens with the Aussie is we actually come down from current levels. We come down to retest this multi-year trend line and we don't break it. Because if we come back down here towards 75 cents and we don't break it, I'm going long again down here. As I went long down here 2 weeks ago, I'd like to take that trade again.
Personally, I don't think we're going to go all the way down there before we see one more leg higher. I repeat, before we see one more leg higher. And you know something, I want to add something to that. Personally, I like this kind of markets. I've mentioned, like, since several weeks ago, that we have had a dollar that is not trading one way or another against every currency pair. I mean, we've had a dollar that has mixed results against other currency pairs. So, for example, now we see that it's, the commodity currencies are a lot more constructive, some of them against the dollar at the moment, like the Aussie and the Kiwi, while the euro is, somewhat under pressure, etc. And the pound has been the past few days under pressure. So I wouldn't find it impossible that even if we see some dollar strength within the next few days, we might, for example, see it come through mostly, let's say, against the euro, against the cable, who knows if it remains in this descending channel, and still the Aussie and the Kiwi holding up decently. That's also a possibility, right?
Yeah, no, that's why I'm saying, like, let's say the euro actually does take a dive lower, and it comes down towards, let's even just call it 116. If it comes down towards 116, does the Aussie outperform? And it may come down, but not break down, where the euro might break down, but the Aussie doesn't. That means the euro Aussie is obviously would be falling as well.
Yeah, or it might remain range bound near the recent highs.
Right. Hey Dale, did you have an interview today?
Not today, Blake.
Okay, yeah, I just wanted to make sure I wasn't bleeding into anybody's time. But I've got to get going. I got to get ready for my trading day. I don't know if Steve, if you're up to taking any other questions, or are you guys ready to call it for tomorrow?
Call it.
Absolutely. Somebody is mentioning gold. We can have a look at the precious metals as well. And unless we have that,
we'll call the gold then.
Okay.
Yeah.
And
right,
also, I want Blake have a great trip, and I want to remind people, if they're way behind, Steve, they're way behind on their Christmas shopping, show them the phone app, because during times like this, we're going to be pushing out resistance support areas that are breached, and you could go about living during these time frames if you have the phone app working for you.
Which is free, by the way.
Which is free.
Yeah,
which is yeah, but of course, for them to, to receive anything, they need to have.
I know I have a million to do before the weekend, so I'm sure other people do, and you're not going to lose touch with the market if you have your phone with you and our app.
Absolutely.
Hey, Merry Christmas, everybody, and Happy Holidays to you all.
All right, Merry Christmas.
You do, Blake.
Thanks, guys. Bye-bye.
Say hello to Mary Bloomberg.
Okay, just a fast catch up with the metals and what's happening here. If you remember, we were looking for a rebound, perhaps even towards 1630 in silver. So that has actually taken place. I mean, we are seeing some kind of a rebound. Definitely, I'm not impressed with the momentum, and my thesis remains that, especially as long as we remain below 1630, we're in a strong move lower. So nothing has changed here for me, and not much has changed for me in gold as well. I still hold my position here, and we have been testing this area of resistance. We haven't managed to penetrate through it. Even if we do, a retest of the broken triangle might provide resistance. The 200 EMA is just below it as well. So for both the metals, I remain bearish, at least in for a few more weeks, especially as long as the levels I mentioned are holding. Now, on the other hand, let's have a look at a few more, first of all, metals, and I want to have a look at oil as well. One of them is copper. Copper has had an impressive recovery, and it's currently testing the trend line resistance of what you can call a megaphone formation. I have been a constructive copper since a long time ago, and once again, this move lower does not look impulsive to me in any way. So a break higher and the push to new highs would definitely not surprise me. Okay, having said that, it's currently testing resistance, so obviously buying it up here, makes no sense. You either wait for a breakout and a retest, or a rejection and finding support once again somewhat lower. Now let's have a look at crude, because I think that crude remains technically very beautiful. Came down, retested once again the broken ascending channel resistance as support, held it. As it seems, it's currently within a triangle. Triangles tend to break in the direction of the trend. That means that I would be looking for a trend for a break higher, for at least one more push higher towards 62, 63. So it's well defined technically.
Would that be a 4 that we're in, and the next thrust
most likely, yes.
Is a
yes,
terminal.
and perhaps terminal. Terminal. It's not like somebody has terminal cancer and then he's dead. It means that it's before we see like perhaps a larger correction lower, and that won't necessarily mean a reversal of the trend. So, for example, after we get one more thrust higher, then we might get, let's say, from 62 or 63, like a deeper pullback towards 55, which then coming back to 55 is going to be, a decent move lower, and then reestablishing the uptrend once again. So, I wouldn't be buying a breakout of this move late. So you either buy it, the moment it happens, because it might not last for too long before we see like a larger correction. But for the time being, I have absolutely no reason not to be constructive crude. Okay. Okay. If we don't have any other questions, which I don't see any questions we haven't covered at least, I think we can call it a day, Dale, and we'll see everybody tomorrow again.
Okay. All right. Well, thank you, everybody. New yearly lows, nat gas at new yearly lows. You want to give Simon a quick look at nat gas?
Sure. I've never traded it, in all honesty, but yeah, sure.
All right, and then we'll wrap it.
Let's have a look.
It's been moving counter trend to oil for so long. I don't know.
Oh, it looks so bad.
Wow. Yeah, that's it.
Oh my God.
Yeah.
It looks so bad and so heavy. Yeah, I'll let me see if we have some continuous. Let me see if we get okay, CFD, sure, good.
Oh, that looks a little better.
Yeah, because I was looking for it.
Yeah. Okay.
So, yeah, it looks somewhat better, but if you look at it.
Yeah, descending triangle.
Yeah. Shit. Even if you draw it like this trend line, which I don't like it like this, but it doesn't matter. Let's draw some fibs and we'll see. No matter how you draw it, this looks
nice look,
somewhat of an important break. Let's see some fibs and see where we currently stand from the.
Yes, can you shall receive. Simon, buddy.
Yeah, obviously, listen, this low that we had there is going to be quite important, right? This one. Yeah. Why? Because it's also the 61 point. It's also the 61.8, and that's quite important. Today we're seeing a quite nice reversal, at least on the daily candle. But even with that being the case, we have another horizontal area here. There it is. Whoop.
Well, man, I think we're in a cold snap, so that could be part of it.
Yeah,
even
there
though
it
it
is.
might be
So, you know, unless it breaks above there, really this looks very, very heavy, very heavy. So
All right.
even if we do something like this, you know, a rejection is
Technical
a high,
analysis on the fly. Look at
yeah,
that.
rejection is a high possibility there, a high possibility. So definitely we don't have enough to look higher. And, you know, even if you zoom out, this is the strong move, which is lower, and this is somewhat of a corrective move so far, and it might be breaking lower once again. So, you know, be careful. Trying to catch a falling knife here might be very dangerous. Today's candle, yeah, today's candle is very nice to the upside, but obviously in such a case, one single candlestick is a lot less than you need. A lot less than you need. Okay.
Thank you, Steve.
Okay.
All right.
Perfect.
Thank you, everyone. Enjoy the rest of your day. Remember, keep your phone with you. You'll be apprised of market situations by the team. And see everyone for Turnaround Tuesday. Don't just count your pips, count your blessings. See you all, my trading warrior brothers and sisters, Kareem, Elena. See you guys tomorrow, and gals. Thank you, Steve. Great analysis, like usual. And we'll try and do our best to fill Blake's shoes the rest of the week. Adios.